we just want to give a big shout out to Bhang to bring Leroy Thornhill, the DJ from Prodigy, last night to the after party. That was super fun. So Bhang's a big supporter of the ICBC. They sponsor a lot of our after parties. So just one more time, give it up for Bhang, y'all. Thank you, Bhang.
Hey, Bhang, Bhang.
Thank you. And without further ado, you guys. Oh yeah, let's see you in Zurich. So if you, we got a special deal going on today. Zurich's gonna be off the charts, 5-star, 5 Stern, super spa, geiles Hotel, direkt oben der Stadt. Es ist echt Wahnsinn, oder? Without further ado, yo, make some noise for Ungayo Bielam, our gracious MC.
Guten Morgen! One more time for Alex Rogers. Put this whole thing together, the whole team. Anthony, Vinny, Noel, Jesse, Tristan, Delia, Randy. I forget everybody else's name. We were out late last night. I don't know if you came to the party, but it was a good time. But we're going to start the panel. I'm going to bring up the moderator. He's the founder and the CEO of Green Rush Consulting. He's very excited. He's going to introduce everybody. Let's hear it for Zeta Ceti!
How's everybody doing today? Good. Welcome. So again, this is about investments in capital markets. This is lovely. This is awesome. So on the far end over here, we got Jamie Pearson. Jamie is the Chief Operations Officer for Bhang Chocolate, the world's most awarded line of gourmet chocolate bars and award-winning CBD products. Bhang, she manages the executive team, contract negotiations, works with Bhang's licenses in the U.S. as well as other countries, and oversees this Cypress Hill Bhang venture. With over 2 decades of operational and financial experience, she brings a pragmatic approach and is a believer in finding the win-win in every deal. Recently, she's been recognized by High Times as one of the 100 most influential people in the cannabis industry. Everybody give it up for Jamie. Next, we got Alexander Straub. Alexander is a German-born entrepreneur, the head of the London firm Straub Ventures and Cambridge Accelerator Partners. He was a Rhodes Scholar at the University of Oxford and eventually moved to New York to establish Lazard Technology Partners II, a $300 million venture fund. In 2006, he co-founded voice-over IP specialist TruePhone and was named Technology Pioneer at the World Economic Forum in 2007 and 2008. Fast forward early to 2017, he launched SnapMe, an app-based e-commerce company based on e-commerce enabled via computer vision, machine learning, and AI in preparation for an augmented reality and VR-enabled world. Give it up for Alex here. Thank you. And finally, we got Gavin S. Gavin is the CEO of Alta, Flora, that focuses on developing cannabis science and IP through the value chain on genetics, formulation, brands, and data. He has raised money in Europe for Alta Flora through HNW and family offices. He also sits on the board of Oxford Cannabinoid Technologies, where they raise money from Imperial Brands, the largest tobacco company in the world, and Casa Verde Capital, that's Snoop Dogg's venture capital firm. He also advised some of the largest corporates in the UK around their cannabis strategies. Everybody give it up for Gavin here, please. Thank you. Okay, so I'm going to start this out. It's the global CBD craze, guys. Everything is going around CBD everywhere. So I want to start out with the CBD market in Europe is expected to be worth 416 million by the end of 2019. This just came out in Rolling Stone like 7 days ago. And by 1.7 billion by 2023. So what are you seeing in terms of the best CBD investments in the European market and specifically in Germany? And do you have any thoughts on what investors should be looking for in terms of CBD opportunities? So Jamie, what do you think?
Well, that's a good question. The CBD companies that I'm seeing in Europe, we're actually distributing our CBD products in Europe and have been for about 3 years. So I have a little bit of experience with it, but what I'm seeing is a big shift in the quality of the companies that are coming forward. There's more of an advancement in tech. And if I were bringing my own capital to the table, I would be looking for teams that are working cooperatively with the European government to make sure that they're going to be able to have some long-term play. Because what we're seeing in the US market versus what's happening in Europe is that you guys are getting to learn from our mistakes. And I would be looking for the teams that have spent some time in the US learning from those mistakes, and then are operating within the confines of, and maybe driving the ship a little bit. Because I think the companies that are really instrumental in driving legislations, they're the ones that are going to make it, because everyone else is going to come behind and follow.
Yeah, excellent. That's a great answer. I mean, it's definitely changing the face of everything, but it's also, what we see in the U.S. too is we have some states that enact CBD laws as kind of an entry point for that. And so it's really interesting to see in Europe. Alex, what do you think about the CBD opportunities that are happening in Europe right now?
Well, clearly it's a regulated environment, and so investors in general react to regulatory industries with caution. So we've seen this in the kind of alternative energy market on the wind side, on the solar side, all regulated markets. And I think what it looks like CBD with the Food Novelty Act, etc., are going to be also in this category. It's more open than THC, I would say. But in general, I think uncertainty creates something what investors don't like. And therefore, I think in general, caution. Yeah. Certainly, this is a once-in-a-lifetime opportunity because of the demand curve actually being created. So I think one needs to balance both sides. And without any doubts, I would say that actually well-organized governments in Europe, which have a clear plan and give clear guidance to entrepreneurs, have a huge advantage to create the diamonds which are in the rough right now. And I would say that mostly it will have to start on the medical side. It will have to start in a regulated environment. And I think when we're in Germany right now, the German government compared to the Danish or others have given a clear guidance what they want to do. It's going to be only a 4-year contract, but I would say these companies which are achieving a license are going to be highly valuable. And without any doubts, there will be huge amounts of capital required to bring those companies to the market. We've seen this in Canada, how long it took for patients to develop. I would say there's a slight advantage here because many patients are registered, and I think there's a familiarity with a product. And so, well, one has, as an investor, has to balance both sides. Yeah, but uncertainty is not certainly something, and regulation is not something investors look forward to.
Well, certainly there's a lot of uncertainty in this industry, and especially with how we're just trying to educate our governments, and it's all about education and awareness. And more we're able to educate these governments on moving the path forward and creating a mechanism in which we're able to move forward. So, what about you, Gavin? What do you think about?
So I'll start with a couple of data points. There was some survey data from the UK which suggested CBD had brand awareness of 50%. And 10% of the population had tried CBD. So I think the first thing is to say this is it's a massive phenomenon driven by word of mouth from the consumers. The second thing, I'd build on Alex's point to say the regulations are shifting, and that makes investors nervous. It also makes entrepreneurs pivot. I've seen a bunch of folks in the UK look at the recent EU FSA rulings and move from food into cosmetics. And so I think you'll start to see entrepreneurs look for regulatory arbitrage is the way to sort of think about it. There are going to be different regulatory frameworks depending on the types of products, depending on the channels. And I think smart entrepreneurs will figure out how to play that arb game. Smart investors will figure out which entrepreneurs to back. And I think there's going to be a lot of opportunity in the space. But I think it's going to be quite fluid for the next few months in Europe. I think the big change is going to be on the back of the Farm Bill. I think if the US gets some clarity around CBD, I think it's going to be incumbent upon Europe to look at that and say, actually, we've got some clarity now, we can bring that to the EU. And so one of the things that we're fighting hard for is a harmonized EU regulatory framework for these products. And I think the fact that this is going to pass at the federal level in the US gives us a good framework to start talking about this stuff in this way across the EU. So yeah, big market. It's kind of fluid at the moment around the regs. Entrepreneurs will figure their ways around it. I think we'll get some clarity through the rest of this year into next year as we look to the experience of the US.
Yeah, absolutely agree with that. And I also think that it's an important point that either entrepreneurs or investors need to be able to pivot at any moment's notice based on their regulatory framework. I mean, it's changing constantly. It's a moving target, and we like to call it dynamic compliance, so to speak. And so that's a very, very important point, and you have to be able to be used to that. So, speaking of different opportunities besides the CBD, are you seeing any other opportunities here in Europe besides CBD that seem like they're worthy of investment? Gavin, do you think?
Obviously, on the medical side,
yes.
I think it's fair to say it's grown less quickly than people probably would have thought. I remember being here in 2017, and there was sort of real hype around. As Alex said in the intro yesterday, there were only 1,000 patients in Germany, and I don't think it's moved quite as quickly as people have thought. It still feels like we're in the sort of let's establish the regulatory framework for medical. There's a lot of infrastructure building happening clearly. The Canadians have sort of been in looking at various different opportunities. There are some Israelis in Europe. There are clearly, some European entrepreneurs looking at the space as well. But it hasn't grown, I think, from a sort of market demand perspective quite as quickly as we'd thought. And so there's still a lot of risk capital going in on the promise of future revenues from the European market. But yeah, aside from CBD, that's the space that we're focused on,
Right.
licensed THC medicine production.
Right. And Alex, you have a pretty profound tech background. Are you seeing any new tech innovation in Germany specifically that is worthy of investment that's, kind of leading around the world or anything like that?
Yeah, I think two things to point out. I think investment and themes come in waves. So I think as a venture capitalist, you have seen this over the last 20 years. It was very unclear in Germany at the beginning in 1998 what will happen with the internet, but we have seen, and eventually caught up. We created companies on our own turf, and we created them all around Europe. Yeah, I wouldn't say we have been as successful as the United States because they were early. However, I think in the patient, medical, and doctor pharmaceutical relationship, there is a lot of lack and slack. I would say that we are at the breakout of formulating machines, software machines, which can identify much better disease profiles than any human doctor. And I think that's due to the intake of information by machines, by software machines on a machine learning side, and then by the input and in layman terms by patients into a mobile phone, and then an analysis. I mean, one has to imagine we have around 7,000 identified diseases. Only 500 are treatable or have a medical product against them. And then if you look down into a single disease, it's often defined and treated with like one pill or one medication. Like if you take autistic children, what we now know is that the DNA decides much more about the treatment. So I've seen more and more companies which coming from that perspective of saying, well, first identify what you've got, better than the doctor, because there's more information. Then actually bring those patients into a DNA test, define what the DNA tells you about, let's say, autism, and then define the treatment strategy. And that will give us a huge increase from 500 diseases to 7,000 diseases.
Wow.
So 6,500 we don't treat today because they're so rare. And then on top of it, every single disease can be treated in 4 or 5 different ways, depending of your DNA. I mean, all of us, I think, have different effects on THC and CBD, and and that has something to do with our DNA and how we are made up. And I think there you have a huge potential going forward, which is much wider than what we're seeing here in this industry, but it's quite determined as well what we're doing with THC or CBD products. Yeah.
Excellent. So there's a lot of pioneering for different investment strategies with different, innovators in that space. So it's really amazing. So, I kind of want to move on to like raising capital in some of these capital markets. So, Canada. Obviously, Canada is a leading country doing this with access to public markets as opposed to the U.S. or other areas. Jamie, do you want to kind of talk to us about how to raise capital and what that looks like, and tell us a little bit about the landscape, please?
Well, Bhang is getting ready to go public on the Canadian Stock Exchange in a few weeks, and that process has been through an RTO, which is a reverse takeover. It's been a long process. We could have gone IPO, and we felt the RTO would take less time, but in reality, it didn't, even though we had a clean shell from a mining company. So what I would say to you, if you're out there going into the Canadian market looking for capital, just do your due diligence and be thorough about that. We had several companies come to us with promises of extreme valuations and different things going on. And the reality is, if you know your company and your value and your ability to generate revenue, you should have a pretty good idea of what your valuation should be. So when companies come to you and they give you something that doesn't make sense, you really need to drive the ship and say, no, that's not where we want to go. Because at the end of the day, you've got to offer your shareholders real revenue, real value, and you've got to know what that is. But I wanted to speak about what Alex was talking about with the technology. The plant that we're all talking about in these rooms, we don't know what it's capable of healing. What we all have is anecdotal evidence that it does work, and it's working legitimately for people. So I'm excited about being part of this industry for technology, for healing. But what I would also like to see is a real common sense approach to the fact that people are going to use marijuana recreationally as well, and that some of that legislation has to happen. I'm hoping the Europeans get it right and look at the taxation and look at some of the frameworks around allowing the plant to be used recreationally and not just medically. I think that's one thing they can learn from us. And then the last thing I want to say is the real commodity that I see as a brand is shelf space. And ultimately, the U.S. is screwing up. We all know this. We can't scale up. We've got it's federally illegal, so I can't build one manufacturing plant and move my product across state lines. It means theoretically I would have to build 50 manufacturing plants to be in a multi-state operator. Bhang's been able to get around that and through licensing and other opportunities. But at the end of the day, the companies that capture shelf space, that's the supply that's diminishing, because cannabis is going to become a commodity, and it's going to be grown in areas where the sun is plentiful, and we're going to be able to get back to the price of the commodity getting low enough to us turning into just a typical industry and pharmaceutical quality medicine for people who want medicine, and recreational quality medicine, craft cannabis, and all of those things. But at the end of the day, it's the brands that are going to matter, and it's the companies that are building brands that are capturing the hearts and minds of consumers and capturing shelf space. Those are the ones that are going to win. That's where I would be looking to put my money. Obviously, the Bhang brand is strong and powerful, but I think the biggest ones don't exist yet. Just like all the cannabis consumers that are going to exist aren't in the marketplace yet, because we've got to reach that point of social acceptance.
So Gavin, you want to weigh in on that?
Yeah, this brand point is interesting. If you look to the alcohol industry, which also went through a period of prohibition, the first brands that were built post-prohibition were those brands that established the functional attributes of the category. So in London, Gordon's Gin was marketed on the fact that it wouldn't kill you and it wouldn't destroy your liver. And I feel like this first phase of cannabis brands are almost normalizing this product for the mainstream with a lot of these functional attributes. So, you're not going to get the munchies and eat your whole kitchen. You're not going to have psychotic episodes. We've got all of these years of misinformation. And I think once those functional attributes in the category are established, then we can start moving to aspirational brand building. So I think the most impactful brands in cannabis are yet to be built. The other thing I'd say from the alcohol perspective, brands are built in the on-trade. So brands in the alcohol space are built in consumption venues, like bars, like pubs. We don't have those spaces in cannabis right now. And I think it's going to be those countries that regulate on the consumption side first that will offer the most appealing brand building opportunities for companies. There's a lot of ritual that is involved with cannabis consumption that is yet to be defined for the products that we're yet to invent. And so we all know the ritual when you go home and have a glass of wine, or for a smoker who goes outside. And I think those rituals are going to be invented for cannabis, and the really smart brand marketeers will tap into the psychology to work out what those rituals are. So lots of investment potential with the brands that are yet to be built, tapping into trends that we're yet to figure out.
Well, absolutely, and I can absolutely relate to that coming from the San Francisco Bay Area, which is ground zero for the cannabis industry from the very beginning. We're seeing a lot of brands come out of California, and of course, licensing the IP and scaling by IP instead of scaling by footprint is a methodology where you can cross state lines or even cross country lines. Just scaling by IP. So I think that's an important factor when you're looking at some of these investment strategies and whether or not the management team is even focused on this. So that's really amazing. What about raising capital in Europe? Do you have any insight on that, Gavin? on how to raise capital in Europe? How does that look like, or what does that landscape look like?
It's really changed in Europe actually in the last, I guess, 3 or 4 years. On the back of this sort of domino effect of all these countries legalizing medical, or at least putting in place frameworks. And so, initially it was almost difficult to talk about it in somewhere like London. How would you approach someone to talk about this specific topic in a space where in the UK this was illegal until November last year? In the last 6 months, it's really changed, and you're starting to see a lot more interest from the venture capital community, a lot more interest from some of the larger investment banks, a lot more interest from the high net worth and family office space. I still feel we're in this space of sort of educating a lot of the investors in London. It's quite unsophisticated. I think we've got a lot of education to do on the Canadian public markets about the metrics that really matter. And that has an impact on how investors in Europe look at these opportunities. The other thing I'd say, is I think we can draw parallels here between the tech industry and cannabis, in that Europe tends to be a little bit more conservative when it comes to valuations, looking for entrepreneurs to get traction or an understanding of unit economics before they really want to scale a company. Whereas I feel like there's a lot more risk capital in North America. So yeah, I think it's going to be an interesting space for Europe over the next few months and years as we start to see more educated investors get into the space with larger checks.
Excellent. And Alex, you have a distinguished career in venture capital. Can you weigh in on some of that between Europe and Canada, and what it's like raising capital, especially for cannabis companies?
Yeah, I would say it's unclear who are the structured venture capital groups in that space right now in Europe. I would say there's a lot of recycling of capital due to the huge success in Canada. So the groups I'm working with in somehow had huge successes in Canada, have huge capital available, and they're willing to invest it at very fast pace. And so it is unclear yet in Europe where to invest it, I would say. It's much clearer right now in other parts of the world. I would say the United States is still a fantastic growth market. But I think structured capital is needed, and I think at much bigger scale than people imagine. In a certain respect, I calculate that Germany would need about 1.5 billion of investment to make the whole industry in the country grow up in the country. Yeah? So that's my back of the envelope calculation. Now, when it comes to banks, it's quite interesting. I have spoken to several banks, and so some Canadians are still close to the idea of actually dealing and having companies in their structures which are cannabis related. While European banks or German banks are sometimes much more liberal. So you go to the chief ombudsman of the banks, and they have no problem actually to touch that industry at all. So in some respect, it's more liberal here than when you speak to certain investors out of the United States as well. I've spoken to some investors in London, and they just say like, well, our pension funds don't allow us, and full stop, end of story. Yeah. So I think it needs a special approach for the next couple of years, and that's a challenge, but at the same time also an opportunity, I would say.
Well, absolutely. I mean, speaking of banks, I mean, the United States, I mean, really, you can't use an FDIC insured bank to get loans or anything for a cannabis-based business. It's just not there yet. Now, we do have the Safe Banking Act that looks like it potentially may pass, but this has been a problem for entrepreneurs and especially retail owners or anybody that's in the cannabis space, because it's mainly been a cash and carry business up until this point. Now, more and more, we're seeing this become more accessible. But because of the compliance factors, you're not able to do that. So it's been really hard for the United States business to scale without private funding. But more and more, we're seeing family offices, get involved. But that's part of the reason why we're going to Canada as U.S.-based companies, just to get that capital so we can scale and grow within the United States. So that's a really interesting concept. But I think as we go forward, we're going to see more and more of this access and being able to access this capital domestically. So. But speaking of which, there's a lot of companies out there in Canada that have like really high valuations, and we're seeing a lot of opportunities coming to investors with these blown up valuations that you can't support those valuations. And so, what are you guys seeing in terms of that? And, in terms of deciding on that, and how do you guys make the investment decisions on those valuations in terms of investing in those companies? You want to take it, Jamie? What do you think?
It's an interesting topic that gets bounced around a lot, especially at these conferences, because people are saying to me, knowing that we're getting ready to go public, what do you think about all the valuations in Canada? Aren't they all inflated? Isn't everything, we just talked in the green room, don't you think people are going to lose a lot of money coming up pretty soon because of these overinflated evaluations? I don't know. I don't have a crystal ball, because when I look back at the tech industry, the companies that made it, I remember thinking, wow, they want $3 for Amazon. And I don't know what's going to happen. So it's interesting. What I will say is I think when that domino falls in the US, it's going to be a game changer again. Because just in the years that I've been in the industry, I'm from Montana. We have a saying, if you don't like the weather, wait 5 minutes. I feel like it's the same thing in the industry. If you don't like the way the industry's rolling, wait 5 minutes and there's going to be a new law. But I think once banking falls, that domino, and we can bank like every other industry, then the dust is going to settle and we're going to start to see the real money come in. So I think he's right. The real money, the big institutional funds, they're not here yet. We've had a couple of people dabble. Kronos got a big investment. We've seen, some of the alcohol companies and the tobacco companies bring real dollars. But those aren't actually real dollars. I think the real dollars are coming, and it's going to take banking for that to happen.
Absolutely. I mean, we haven't even seen Wall Street jump in or any of these big groups come in. What do you think about this, Gavin, about the valuations aspect of these companies and things like that?
Yeah, I think it's interesting. I can believe the Canadian valuations if you think they're going to dominate global cannabis in perpetuity. If you think there's going to be competition, these numbers look inflated, and that's the only way that I can see it. I think that the interesting point on banking is going to be, right now there's a discount applied to US stocks traded on the CSC. I think the moment this changes, the banking question, these multiples will all change. The risk profile for the US companies becomes a lot safer. The ability of the Canadians to compete, lacking this US competition, disappears. And I think there's a real inflection point on some of these multiples that'll come on the back of further US legislative change. Mm-hmm. It's interesting to look at how this is impacting on Europe, though, because a lot of the story that is promised right now in Canada is around global growth. And so we sort of need to see these European markets move for the Canadian valuations to be justified. And so I think some chickens are going to come home to roost over the next few months as we start to see real data coming out as to the actual size of the market. And it kind of feels like what we really need to be talking about is demand generation in Europe, which is a tough question. It speaks to some of the points Alex was making around sort of the future of medicine, the future of the clinical trial, but it requires all of us to engage with healthcare regulatory agencies, the medical establishment, to make these markets move, to have any chance of these valuations being justified.
Absolutely. I totally agree with that. I mean, Alex, what do you think about company valuations and how that's being evaluated based on some of these inflated companies that are doing it? I mean, it's based on hype, mainly. What do you think?
Yeah, I'm very cautious because I've seen it over the 20, 25 years I'm in this industry on the tech space. In a growth industry, it's very hard to value a company because you have the PEG ratio. And so, yes, they look high, but I would say you have to be careful. You have seen that. I've seen that on Facebook when Zuckerberg, Mark was running around Davos with 2 billion valuation, while MySpace had twice the numbers of users and sold for 600-700 million. Yeah. So I saw it with Larry and Sergey and Google, tiny companies. Others had tried Search, Alta Vista, etc. Don't underestimate growth. Yeah? And I think if a market is growing, a lot of mistakes can be just forgotten, and companies can grow up. And at the end of the day, it's paper money, and these companies using that paper money to grow into markets. And Germany, for example, will be a gigantic market. We will see 1 million patients, maybe more, consuming 2 to 3 grams per day. It's a $5-6 billion industry. So you can create, let's say, 10 times multiple. Create in Germany 60 billion market cap on the stock market alone. And if you take the Canadian companies jointly, I mean, sure, they have high market caps. Maybe they're 3 times overvalued, like an Aurora now is doing 300 million revenue. Give them 3 billion market cap, but it's a growth story. So I wouldn't bet against them. You have to be very careful if you want to short these businesses. And I've seen that throughout. And clearly, people will definitely decline in value. Some of these companies which make strategic mistakes, some of them won't get licenses where they want to get the licenses. They will be cautious in terms of acquisitions, and then they will fall to the wayside. But that's a process of the next 2, 3, 4, 5 years, 10 years. But I mean, we are not here to actually bet for stock market companies which are already floated. We're here to build companies from the base and the ground up. And I think, yeah, that's absolutely possible.
Excellent. That's a great answer. So, speaking of public companies, let's talk about the difference, private versus public. Let's just talk about that. Let's just discuss the difference in how companies seeking investment decide on which investment partnership to go with. What's best for them strategically, from a partnership perspective, from a brand perspective, from a growth perspective. Let's just talk about that a little bit. What do you think, Jamie, about the difference between those two and how you approach that?
We discussed it a lot at Bhang. When I first started working there, we weren't really looking to go public, but we just kept having banks come to us and say, we think you guys will be great as a publicly traded company. We want to take you public. And we saw them looking at us as an opportunity, which caused us internally to start having a different conversation. And what I would say is the beauty of private money is you can make private decisions. You can make mistakes, and everybody isn't, looking under your skirt. But when you're public, everybody knows everything as they should. The public is putting money into your company, and they need to know what you're doing. They need to know what your vision is, and it forces you to flesh out your vision. It forces you to get your strategic plan in place and have some discipline that you don't have to have when you're private. So we saw going public as a multi-fold reason to make our company better. And one was, we have so many devoted fans that write to us and ask, how do I invest? I love your product. Your chocolate changed my life, kind of thing. And so there was just a part of that notion that Scott wanted to open it up to the people that have built our company. So there was sort of an altruistic decision in the background. And also, we don't want to be afraid of having people look at what we're doing. Bang's been a trailblazer. We had the first nutritional fact panel on an edible product before we sold one product. We had Lloyd's of London product liability insurance before we sold one product. And at that time, you were buying brownies out of Ziploc bags. So we brought that sort of regulation to the industry. So we look forward to the challenge of having people look up our skirt, because we've been operating a really clean company for a long time. So I think that that's the rub. Do you want to make your decisions in private, or do you want to make them in public? And some companies don't want the dilution that comes with, if you're an owner and you've built a company and you go public, you're going to give up some of your equity. There's some of that you have to think about, but I think a small piece of a giant company is just as valuable as a large piece of a smaller company. And so public capital also allowed us to expand, into global markets, and we want to dominate the globe. We want to bring our brand to the globe. So how do you do that with private funding? There's lots of high net worth individuals out there that could have helped us go that route. This seemed like the right decision for us.
Yeah, I mean, I totally can agree with that. And I also think that it's the difference of your business model too. So in my case, I've just launched a technology, a piece of software, SaaS-based software that helps with permitting, licensing, and accelerates the process. I did the same thing with the Vancouver, met a group who was a mining company. They wanted to relist on the CSE. But instead of an RTO, what I did was a qualifying asset transaction. To help them relist, which doesn't require the 5-year financial audit. And based as a cannabis company in the U.S., even as a consulting company, it was very difficult to find someone or a company that would, basically do a 5-year audit on us and put their name on it. So instead, we did a qualifying asset transaction, which allowed them to relist. So it's just a different methodology. And for us, we needed access to public markets to get access to this capital for opportunities coming through our network. So in the case of Jamie's, it's just scaling the business and scaling the brand. In ours, we just needed access to that public marketplace. I mean, so it's just different ways of doing that, which I think is quite interesting to see. What do you think, Alex? I mean, what is your opinion on private versus public, like in some of the?
Well, I think in the last years, due to the large funding available for companies have chosen to stay private much longer. In this sector, however, due to I think not enough investment, people have chosen to go public early. And being a public board member for 10 years, it's a huge burden, and it's a very expensive exercise to be a public company. And forbid you decide you want to go private. I mean, that's a lengthy process, and if you've gone through that, that's quite painful to go public to private again. Now, I would say a lot of these companies go prematurely. And if there would be more capital available on the private side, people will choose to stay much longer on the private side. We have seen that in the tech space happening. And I think, but right now, I think people don't have another choice. It's a growth market, people are hungry, and so people go prematurely to the stock market. And I think there will be a lot of shakeout, and a lot of people won't be able to handle it properly. So my choice would be to stay private longer until you're a much larger company. And then on top of it, what do you gain from being a public company? A lot of companies which went public, even, I mean, in Canada, they didn't have any float. So the founders, they have nothing from this IPO. You can't do anything with a stock, and you're lucky if one of the bigger ones buys you. So I think it's a balanced approach. You have to look at it. Clearly, some early ones will be winners, but you might be a big loser being too early public. So I would say it's much better to work with a consortium of investors which you can trust, which are on your board, which you can work the process until you get into a stable situation to take the companies public. And I mean, in Germany, we have a long history of companies which are hundreds of years old, and they have never gone public. And so.
Great. Gavin, do you want to weigh in on that a little bit?
Yeah, I think it's probably worth remembering that it was a sort of speculative mining index in Canada that led to a lot of the funding of this industry early on. And it was a point in time when there was a lack of access to capital. And I think that's really changing now. So I think we will see companies stay private for longer in Europe as they're building out. We do, however, have a couple of companies that are listed in London on the Next exchange. So in much the way the CSE has started to gather a reputation around being a place where companies can go get liquidity, I think the Next in London will start to become that sort of place. So there's Sativa and Ananda investments on the Next. I've spoken to AIM in London about potential paths to liquidity for companies in the future. And then we have, Stenocare in Denmark. You're starting to see some companies in Europe emerge and look to public markets for capital rather than private. But in general, I think I'd echo both points that we're going to make mistakes in this industry. The regulatory frameworks are going to evolve, and it's, I think, better to adapt your business in private while you're in this quite fluid space where things are being figured out.
Excellent. So I'd actually like to open up, some questions, because I'm sure you guys have a lot of questions for us. So let's get started on some questions.
Let's hear it once again for the panel, first of all. We'll go this way and then that way. That was very, very exciting.
Thank you very much. This question is principally directed to Alex. You talked about governments needing to give a clear plan and guidance to entrepreneurs to make the right decisions. Could you focus a little bit on which governments in Europe, in your opinion, have the highest chance to fulfill this requirement? Focus a little bit on Switzerland, which in my humble opinion seems to be on the forefront in many of the developments, and the subsectors you would put your money to work.
Please be brief.
Well, very difficult questions, I think. And very hard to answer. I would say it's. I mean, I'm biased, so let's put it that way. I'm very biased for Germany because I'm German, and I think I've seen it in a lot of industries. I think we're slow, but we will get to the point, and when we get to the point, we'll do it, I think, correctly, and then it will be a huge success. So I would say what I see so far, it's Germany. But yeah, so I mean, we're in a single market, we're free and open, so others might have a chance as well. I just feel that from an organizational perspective and curiosity, this market is highly educated. I think they're open for a change, and they're open also to adapt new products from the consumer perspective. The pharmacies are ready, the doctors are much more ready than anywhere else, like compared to England. It's a clear path. I mean, politically, maybe not everybody wants that to happen, but I think when people see the positive sides, and this has to be coupled with research, R&D, and more medical studies, etc., I think we will get there. That's my opinion, but this is biased, and I think I'm not fully and 100% informed about everything in Europe, and so a lot of people in the audience might have a lot more knowledge than I have. So, yeah.
Hey, great panel. Thank you very much. Right here? Okay. And thank you also for saying what you did about the German market, because I work with a startup here in Germany, MedPayRx, and we're getting a lot of support. But my question to you is twofold. And I kind of bring back one of the themes that you talked about earlier. Here in Germany, obviously the regulatory markets are a little bit tougher. I live in Frankfurt, where the Deutsche Börse has this entire industry from North America under super secret probation, basically. And that has to do, I think, with the maturity of the industries you were talking about. But what do you guys see? And I'm sort of trying to elicit your comments and helpful suggestions about how American and Canadian funds are getting information about the opportunities here. I mean, this being Germany, there are incubators, there are accelerators, there's government money if you're looking at it from science, and most of the investors I know and talk to are delighted to have that opportunity. That's it. That was it. What do you see in America about that?
Any question? What do you guys think?
Who was that directed toward, Margaret?
I would say, look at this conference. It's still early days. I can't see the usual suspects here. So they're not here. They're right now in their office or somewhere else, and I think they will show up in this industry. Or one creates new, essentially, investor types. What I see at the moment is people recycling their capital and trying to jump into this once-in-a-lifetime opportunity. It doesn't happen often, but this industry, I think, is ripe and has 30 years in front of it, and you can invest into it, and you can build step by step, and a lot of very, very good companies will be created in this industry. A lot. I mean, a lot of employment, a lot of taxable income. So it's absolutely worthwhile to be here and discuss it with all of you, and it's going to grow up. It's that's what I see. But right now, I think the capital in this market needs to be convinced and recycled out of the Canadian market, out of the American market. And I think right now what I see is the Canadians investing into the American market next. Yeah, so we will see a lot there, and then I think we will jump to Europe. So we have a bit of time still. Yeah? And as things become clearer, good management teams become clearer, good strategies, etc. So, yeah, there's a bit of time, I would say.
From the American perspective, that's why I'm here. I'm curious for Bhang about what's happening in the European market. So I'm finding out about things like your program, incubators and things, by basically getting out of the office and putting myself out there, meeting people, and this is my second year at ICBC Berlin. I made some strategic partnerships here last time, and that's why I'm back, because it was effective. If you want to meet the people who are doing things, you've got to go meet them. There isn't information, I would tell you, though. I would not know about you, Marguerite, if I hadn't come here last year. So to your point, there isn't information that I'm finding, and I have my ear to the ground of the capital markets. I don't know what's happening in Europe other than the efforts that I've made to figure it out for myself.
Perfect. Other than coming to the ICBC every time you can to meet all the people and all the movers and shakers. Let's hear it for our
Thanks,
fantastic
guys.
panel.
Thank you.
That was great. I'm sorry we're out of time. That was wonderful. I appreciate you all for getting up so very early in the morning. Because if you were at the Gretchen last night, you know that we kind of turned it out a little bit. There was a lot of